Trump says he's close to a deal with Iran, and he's framing it as strength through negotiation, not endless bombing. But every time these wars inch toward a settlement, the machine that profits from conflict starts rattling in the background. The real question is simple. Who benefits from delay? Trump is now saying the next wave of strikes on Iran is off because progress has been made in talks, and the core demand is clear. Iran cannot end up with a nuclear weapon. On the surface, that sounds like diplomacy. But the deeper pattern is that the same war cycle keeps feeding power, leverage, and money into a long list of actors who gain from managed instability. And this is where the Ukraine connection matters. The war in Iran has already been linked to pressure on US weapons stockpiles, which then feeds back into the Ukraine question and the broader defense supply chain. In other words, these conflicts are not isolated. They're interacting systems, and every escalation creates more demand for weapons, more justification for budgets, and more room for political actors to keep the crisis going. That's why you should be skeptical when the headlines focus only on diplomacy failing. Sometimes diplomacy is not failing by accident. Sometimes it's being boxed in by a structure that makes peace less profitable than controlled conflict. If Trump is serious about a deal, then the real test is not whether he can say the word peace. The test is whether he can survive the resistance from the interests that do best when the war stays alive a little longer. The alternative perspective. Iran and Ukraine less as isolated geopolitical conflicts, and more as managed pressure points inside a larger financial reset. War is not just about territory or ideology. It's about capital flows, energy control, and who gets to profit from reconstruction and reallocation afterward. The headline narrative focuses on missiles, while the real story is the financial architecture beneath the conflict. The alternative take is that war persists because different complexes profit differently from it. The military side profits from weapons and escalation, while the financial side profits from managing the aftermath, restructuring assets, and steering the next order. That means peace is not always the default goal of the system. Sometimes a controlled level of conflict is the more useful arrangement. Part 2. SpaceX IPO. And while all this war talk is happening, Wall Street is doing what Wall Street always does, pricing the crisis into the next trade. The SpaceX IPO is the perfect example. A massive market event wrapped in strategic tech language, with a valuation push that makes the whole thing feel less like a normal listing and more like a controlled launch of capital and influence.
I always think about this. There are always problems on Earth. There are always problems on Earth. There are always things that we wish to be better, that we want to solve here on Earth, and we should solve them. But there also have to be things that get you excited about the future, that make you glad to wake up in the morning, because you can't wait to see what happens next. And that's the future that SpaceX wants to bring to you.
Here's where the manipulation angle comes in. When a company can set a fixed IPO price, lean on retail FOMO, and maintain extreme insider control, you're not looking at a clean market discovery process. You're looking at a system where narrative, scarcity, and access do a lot of the heavy lifting. And when the same financial ecosystem is tied to defense, geopolitics, and war spending, the line between investing and steering the market gets very thin. Because while the public is being told this is about peace and security, the markets are already turning it into a trade. Look at SpaceX. A massive IPO, a huge valuation, tight insider control, and a setup that rewards scarcity, hype, and FOMO. That's not just capitalism. That's narrative-driven market power. The alternative perspective. This IPO is not just a company listing. It's part of a bigger liquidity and narrative operation. The valuation story is tied less to rockets and more to AI, data centers, and strategic infrastructure, which makes the IPO feel like a market event with geopolitical implications. The point is not only to sell shares, but to help reinforce the broader market structure that depends on elite capital formation and story-driven pricing. The system is already rigged through liquidity injections passive flows, and narrative management. So when a huge IPO comes along, it can function like a pressure release valve for the whole market, especially if institutions need a success story to keep confidence intact. This is less free market price discovery and more managed perception inside a fragile financial system. War, IPOs, and market rallies aren't separate events. They're different instruments in the same financial orchestration, where conflict creates the narrative and capital decides the outcome. In closing, so yes, the wars are profitable, but so is the storyline around them. And in a system like this, the conflict, the financing, and the media pulse all feed the same machine.